Welcome to the deep dive. Today, we're doing something pretty specific. We're analyzing a source that gives a four-step playbook for figuring out if a crypto token is legit.
Yeah, and the token in question is the Sora Oracle.
Right. So for anyone out there trying to make sense of it all, this deep dive is about giving you a structure for your own thinking.
And what's really fascinating is that the source provides a repeatable methodology. Think of it as a checklist, scam versus a real project.
But there's a big disclaimer we have to mention first.
A huge one. They're very clear, and we have to be too. This is all educational. You absolutely have to do your own research. DYOR. Our mission here is just to show you how you might structure that research.
Absolutely. Okay, so let's start. The first step is all about checking the social weather, so to speak.
Yeah, it's simple. You just open the token on CoinMarketCap or CMC, but you're not just glancing at the price chart.
No, not at all. You're looking for something else.
You're trying to gauge the immediate public perception, so you dive straight into the public comments.
Looking at both the positive and the negative ones.
Both. The bull and the bear comments. You're trying to find actual intel in there, like users claiming they can't sell the token or that something feels off. It's about finding those early warnings.
Warnings about rug pulls or scams.
Exactly.
Okay, so if the community vibe feels a little shaky, we move on to the hard facts. That's step 2.
Right, the technical side. You copy the token address from CMC and you paste it into an on-chain tool, something like DexTool.
This is where we look under the hood.
Yeah, DexTool gives you an immediate security score. You're checking two things here. First, the automated audit scan.
Which is scanning the code itself.
Right, for vulnerabilities, backdoors, that kind of thing. But the second check is often more important. You have to scroll down and look at the raw buying and selling transactions.
Because the audit might be clean, but the behavior is what tells the real story.
That's it. You're looking for weird patterns, signs of a pump and dump or massive wallets dumping all their tokens right after it lists.
That makes perfect sense. So let's say the tech audit gets a green light. The next question is, well, does anyone actually trust this thing?
Exactly. Is it on a major platform? So we go back to CMC and click on the market section.
Because liquidity and availability on big central exchanges are huge indicators.
A massive indicator of legitimacy. You're checking if it's on an exchange that has a serious vetting process. The source listed names like Binance, Coinbase, KuCoin.
Crypto.com, Huobi, Gate.io.
Yep.
Usual suspects.
Yeah. If it only exists on some niche decentralized exchange, that's a pretty big red flag about its long-term chances.
So this brings up a critical question. If a token is on Binance, say, with lots of liquidity, doesn't that inherently reduce the risk of a few people having all the control? Why do we still need a step 4?
That is a great question, and it's a classic trap. High liquidity just means a lot of trading. It does not guarantee decentralized control at all.
Which is where the final step comes in, drilling down into distribution.
Yes. Step 4. You need to check the holder section. You have to look at the concentration of wealth, the holder's transaction details.
You're looking for the whale.
You're looking for the whales. If you see, like, a handful of wallets controlling the vast majority of the supply, that is a huge risk.
Because they can just dump the token at any time and crash the price.
Even if the token is technically sound and listed everywhere, that centralized control can kill a project.
So after running the Sora Oracle through this whole process, sentiment, audit, exchanges, and holders,
Yeah.
what was the source's final call? It was strikingly precise.
Yeah, their final opinion was oddly specific. They concluded the project carries and I'm quoting here, 35% chance that it is a scam and 65% chance that it is a laser or good project.
Laser or good project. Yeah, the phrasing is a little awkward, but the point stands.
It's not a simple pass or fail.
Yeah, exactly. 35% versus 65%.
Right.
It's not a clear yes or no. And that leaves us with a final thought for you to think about. The real value here isn't that final percentage. It's having the structured multi-platform methodology in the first place.
Right.
So if a single source gives you a percentage breakdown like that, how do you then use that structure to inform your own critical thinking? And maybe adjust those percentages based on your own tolerance for risk.